This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, November 2nd, 2015. Euro dollar. So the euro has seen a bit of a pop over the past couple of sessions, with the market rallying out from recent multi-day lows after the market took out some critical support at 110.87. Ultimately, the focus remains on the downside, with a lower top sought out now ahead of fresh downside back towards that July base at 108.09. Look for any rallies over the coming sessions to be very well capped ahead of 113. Sterling dollar. So cable has seen a nice little pop off those recent lows that we saw earlier last week, although the market continues to show signs of topping off that 2015 peak at 159.30 with a series of lower tops seen since. At this point, ultimately any rally should be very well capped ahead of 155, with a lower top sought out ahead of the next downside extension below 151.07 and towards 150 further down. Dollar yen. So dollar yen has come back under pressure in recent trade after the market once again stalled out by critical resistance by that August recovery high at 121.74. While the market holds below that 121.74 August recovery high, the pressure should remain on the downside, with deeper setbacks now seen back towards recent lows around the 118 area, below which exposes the August base at 116.12. Euro Swiss. So not much going on with Euro Swiss over the past several weeks, with the market confined to a consolidation, although the broader recovery outlook remains intact, with the market seen higher back above recent highs at 110.50 and towards a measured move objective at 112 further up. At this point, only back below 107.14 would compromise this outlook. Aussie dollar. Aussie dollar remains confined to a broader downtrend, although the market has seen a bit of a bounce in recent trade. Ultimately, though, any rally should be very well capped below 74, with a lower top sought out ahead of the next downside extension, back towards and eventually below the recent multi-year lows just over 69. Dollar CAD. So although we've seen some setbacks in recent trade from dollar CAD, the market remains highly constructive after being very well supported by some previous resistance at the 128 area. At this point, any setback should be very well supported above 130 on a close basis, with a break back above recent highs that we saw in the previous week, which come in around 132.80 to take us back towards the 11-year peak at 134.57. Really, ultimately, only a break back below 128 would compromise the bullish outlook. Kiwi dollar. So although we've seen a bit of a jump in Kiwi over the past couple of sessions, the market looks to be in the process of topping out ahead of the next major downside extension back towards those recent multi-year lows in the 62 area. Ultimately, any rally should be very well capped below 70, with this market confined to a broader downtrend. SPX 500. So the S&P 500 is finally showing signs of stalling out after that impressive recovery run basically since August, with the market now trading all the way back up just over 2,000. But some resistance has come in now, and the market put in a bearish outside day formation on Friday, which could open the door for deeper setbacks in the sessions ahead. But ultimately, a break back below recent lows that we saw down around the 2058 area would be required to take the pressure off the top side. Gold. So although we've seen setbacks in recent trade in the gold market, the recovery outlook here remains intact, with the market trading back down into some rising trendline support. Ultimately, a higher low is now sought out somewhere above 1130 ahead of the next upside extension back above recent highs that we saw in the 1192 area and towards 1233 further up.